one piece of information that we're getting. And that's why the line chart is just inferior to the candlestick chart, because the candlestick chart gives us more information. And I'm going to teach you what the components and elements of a candlestick are. So here is our candlestick we're going to look at right here. All right. Now, green candle. Is a green candle bullish or bearish? What do you think? Ocular says no, dark mode is diabolical. Yeah, I can't do the dark mode. I got to do the light mode. Yep. So it's bullish. And so let me explain. I'm going to type this here on the screen for you guys. A green candle is bullish, and it means that the price closed higher than where it opened. And I'm going to show you this here in a second so you can understand it. Okay. So this candle that we're looking at is from today. So this candle represents January 6, 2026. All right. Now look at this. This rectangular part here, this is what is known as the candle body. All right. So let me type this here on the screen. Candle body. All right. And you can see that there are a variety of shapes that candle bodies can have. You can see this big, massive guy right here. They call this a bearish engulfing candle. And this one today has a pretty small candle body, right? It's not big at all. This represents some indecision here on Chewy. And we could see the bottom part of this candle body right here. This is where the price opened, right? So right here, the bottom part of the candle body, this is the opening price. All right. Got it? So the candle's color is going to be based on the open and close. So because we opened here at about $32, right? $32 even. The price pushed higher, and you can see it went all the way up here to 32.66, and we'll talk about that here in a second. But the top of the body here at 32.15 is where it closed. All right. So the top of this body, let me draw a line right here. This is the closing price. Closing price. All right. So because the opening price was lower than the closing price, that is what makes the candle green and a bullish candle. Now, even though this finished as a green candle, that doesn't mean that the price is higher than it was the day before, because we could see that it's not. It's actually lower. Well, it's very close. It's actually, it closed where it closed yesterday. And we'll talk about bearish candles here in a second. But the primary concept you need to understand here, when you're looking at green candles, the bottom of the candle body is always going to be your opening price, and the bullish candles are going to close higher, and that's the top of the candle body. So that's right here. Okay. So those are two. So that's two data points that you're getting right away that we've covered versus the one data point that you're getting from the line chart, right? Which makes this a better chart to use. Now, in addition to that, we have these two long lines coming out of the top and the bottom. And let's start with this bottom part right here. So some people will call this a tail, a lower wick. You know, there's a bunch of different names that you can use for it. We're just going to call it a lower wick or a tail. All right. Does anybody want to take a guess what the bottom of this wick represents? Ben, yes, that is the lowest price of the day. Very, very good. Great job. This is the lowest price of the day. Now, here's the thing. The bears pushed the price down. They dropped it. They got it down to 31.51, but they couldn't hold the price there. And I can see that some of you, so Shankar says this and Natalie does too, is they wrote buyers or buying. When you have a longer, lower wick like that, indicates to you that buyers are stepping into that price area and are pushing the price higher. So that's what is happening. So even though the bears dropped this down here and created this price area, they pushed it down at 31.50, the bull stepped in and bought it up, right? So this was the lowest price of the day, but the bears could not hold that price at that level. Okay. Yes, the bull stepped in. So now we have 3 data points from the candlestick chart. We have the open, the close, and we have the low of the day. So now, if that lower wick is the low of the day, the upper wick is the what? You guys know this. I'm just going to wait. That upper wick is what? What is it? The high of the day. Yes, this is the highest price of the day. All right. Perfect. It's the highest price of the day. And a similar concept here. The bulls try to drive this thing up. They were retracing this big bearish engulfing candle that came in the day before, but they could not hold the price action there. Right. So it showed that they really tried to push it up, but they couldn't sustain it. And then what happens is we could start putting all this information together. So we have this longer lower wick, we have a longer upper wick, and really that's pretty even. This candle is pretty even in terms of buying pressure and selling pressure. There might be a tad bit more selling pressure. And this is it's an indecision candle. Some people might call this a spinning top candle. And we're able to glean that information just based on the parts of this particular candle, right? The open, the close, and the high and the low. We could see that it's even across the board, which tells us that maybe traders and investors are waiting on some information to come in before they fully commit to pushing this in either direction. Okay. So that's what we get from the language of the candlesticks. All right. So those are the 4 parts. Yeah. Doji. And for it to be a true doji, you would need no real candle body. The open and the close would have to be the same. Those are your purists, your doji purists. And then the crazy thing is if you get into the language of candlesticks and patterns, there are like 6 different types of doji candles. And then you get into patterns, it's a whole nother world. But here's the thing, you don't need all of that to get started. But over time, it's something that you want to learn. All right. So those are our bullish candles. Now, for a bearish candle, it's just going to be the same type of concept. But the difference here is that a bearish candle is going to close lower than it opened. All right. So here, and we're looking at this big, massive bearish engulfing candle. Come on, trading, you work with me here. I'm trying to point to the open right here. So right here, this is where the price opened. So opening price, right? And for bearish candles, they open higher and they close lower. So right here is where the price closes. So this is our closing price. Let me type this in here. Does that make sense? It's just the flip of what a bullish candle is. So this is our closing price. And then here's the thing. The upper wick and the lower wick don't change. So just a quick quiz for you guys to reinforce this. The lower wick represents the what? Even if it's a bearish candle, the lower wick is the what? It indicates buyers, but it's also the low of the day, right? Low of the day. And it's not the closing price. Remember, the closing price is the bottom of the candle body. The lower wick, the very bottom of that wick, is the lowest price of the day. So if that lower wick, the bottom of the wick, is the lowest price of the day, the upper wick is the highest. It's the highest price of the day. All right. So that's it, guys. The 4 parts of candlesticks. You have the open and the close that creates the candle body. You have the lower wick. The bottom of that is the lowest price of the day. You have the upper wick, which is the highest price of the day. And those are the 4 pieces of information that you get from candlesticks. All right. And so what you could do is really just go back and look at the chart and study the price action and see how is it moving.